Good morning, everyone. Hey, buddy, how are you? You okay? Hey, Marcus, how are you? What's up, Tim? How's Budapest? I hear it's a pretty cool city. I've never been there. Okay, here we go. We got to start. A couple of things. I wanted to have a lab today at 11 o'clock. We're not going to be able to do it because yesterday we did our podcast, but for some reason the it did not get recorded, so we have to redo it. But I'll figure out a new time for you guys for the next session. We'll probably do it tomorrow. All righty. How are we gonna do this now? What are we gonna do? What's going on? Yeah, that's okay. It's these things happen, right? It's not the end of the world. Consider it a practice run. Oh, it's happened. I mean, it's happened to me too. Sometimes I'll do sessions with you guys and I forget to record it. I'm like, damn it. So that's show business, right, Raj? That's show business. That's show business. That's funny. Oh, man. Okay, man. I'm feeling lazy. No, okay, let's get to work. Okay. All right, all right. Work, 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 work. Overnight inventory is long. Thank you, Badir. Getting me on track here. So the markets are working very nicely. Right? They're working as they should. Right? We had a liquidation yesterday at the end of the day. We took all that cheap crap from here and we're selling it at higher prices at night. That's a perfect night session. When a market goes up, usually it retraces at night, allows shorts to cover. When markets go down, right, they do that at night and allow the people who bought inventory to get rid of it. Beautiful, right? So business is working quite nicely. Nice little liquidation. Let some of these people get covered. They still have this big ass gap here, right? So we got into it and we found the bid yesterday around 75, and then today we couldn't take out yesterday's low, so take that, go sell it. Inventory's long. As London opens up, we're going to be looking for a correction lower. Okay, let me just get rid of this. Is that move up that we had? Let me just clean out these profiles. So here we are. We go throw in the stops. The stops are just at every half hour candle bottom. Real simple, right? So inventory is long. There's the close of yesterday, 5 p.m. Right. So we took that inventory. The market, you can see the market opened right there. Boom. It opened at 81 quarter and then straight up, not even one tick lower. So that's typically when you have that, that is what we call a catcher's mitt, right? You have liquidating inventory, right? Taken into wholesale hands and then resold into the retail flow for a profit, right? Very simple. It's normal business, how business normally takes place. So now what I'm going to do is I'm going to do the balance zones with you, okay? So we can do them together. So where do you see a balance, right? I see balance here, all right? I see a back and forth here. Let's see if we can narrow this down a little bit. Right there, right? So what am I looking for? Milo, are you on this morning? Because you're like every new trader, you're obsessed with getting the balance zone right, and I understand. So what I'm looking at these highs, I'm looking at this low. Right? When you look above that high, do you come back to that low, right? That's basically what I'm looking at. I'm just looking for that rotation, okay? And it doesn't have to be precise. It doesn't have to be exact. As you go on in time, it will get better because you will see balance automatically. And then what do is you just double it up and you double it down. Because once you got a cost basis, you know where people have paid for their stuff. This is the discount zone. The green is the profit zone. Pretty simple. And the trades we're looking for are trades like this when you get a look below and fail, right? So you can see there's a bid here, there's a bid here, there's a bid. What's been going on over time? That bid's been moving up, right? So right now we're just kind of in distribution, right? We've got sellers here, we had sellers here, positions underneath 7606. So now we just chill and wait for our setup. And that's it, right? This you leave alone. See how small the candles are, right? You guys with me? Someone say yes in the chat so I know that you got asleep, right? Thank you, right? Okay, there you go. Point of control, overnight point of control is up here. Good distribution. Yesterday's point of control is here. So when we had that liquidation, didn't liquidate that much inventory, right? Okie dokie. Make sure I have the stops all set, put in there. And now we wait. Let's see if we get a reaction when we come down to 7606 and a half. So we've gone, we had a nice big move up. The gap is still there. We're just looking for distribution. That's what's going on right now. And we're distributing on a smaller time frame and on a larger time frame. Today is the Fed, indeed. So that's a good point. Thank you, Murat. Today is the Fed. So that means that traders who are who had to take in inventory yesterday are getting rid of it today at night. Wouldn't you want to get rid of some inventory before a volatility event, just in case? Hey, Dave, have two adds to the puzzle, or is it? Not sure what you mean, brother. Just means that it's going to be slow. That's all. Fed days are slow, right? Nobody wants to take on risks. You just kind of chill out and you trade at your edge. Margins are increased, right? Right? Because it's, you know, brokerage firms have to protect themselves from idiots, so they have to increase their margins, right, to protect their capital, right? Yeah, so it's going to be a little slow here. We'll keep the session nice and short. London's going to open now. If we don't get any serious order flow coming in, if you guys don't have questions, I'll keep the session short so you don't get bored. Yeah, the last couple of Fed days have kind of been a non-event, right? We haven't really had much action, right? This is the worst kind of price action. It is slow, it is creepy. There may be follow through, they may not be follow through, right? You definitely don't want to be trading this. It's not scalping price action, right? Yeah, there is a new chairman. Yeah. When I'm looking at the look below and fail, sometimes I hesitate to take the trade if the move down into the low is made up of strong bearish candles and noticeable upper wicks. There's the issue. Rejohn, so what you need to do, I figured it out. See, I don't know what a bearish candle is and noticeable upper wicks, nor do I care. Your thinking is that those upper wicks show sellers were active on the way down and they may still be there. And they're not sitting at those price levels. They're not defending anything. This is not Braveheart. They're there to sell. So what you need to do is stop looking at wicks and twicks and bearish candles and raccoonish candles and squirrel candles. Just look at the top of the candle and the bottom of the candle. So I do not factor in wicks as potential resistance. All I care about is where the seller is going to be. Are you with me? This is a really good question. Rejoin, you there? Okay, you can hear me. Okay. So take what you know about candles and throw it away. Take what you know about candles and wicks and bearish candles and bullish candles, take that and throw it out. Okay? Just get rid of it. And all you need to do is care about this. Okay? When the market comes underneath a level and comes back up, right? Look, all you do is you draw a simple line here. You know the sellers are going to sell into it. Right there. See the top of that candle, how it stopped before that white line? Right? This whole wick and everything and bearish candles and different types of candles, it's all BS. It's a waste of time. What you care about is the print. Do you guys know what a print is? A print is the recording of a transaction. So when the market transacts at a level, it prints the price. That's why we call it a print. So here, no matter what happened, you see the top of that candle, there was a transaction there, right? There was a transaction at the top of the candle, and there was a transaction at the bottom, right? Top of the candle transaction, bottom of the candle. For the candle to have actually printed there, there has to be a transaction there. That's all you need to care about. Because here's the deal. The bottom of the candles are where the sellers stop selling because they see buyers, right? And they raise price. So whether it's a wick or a twick or a bwick or whatever the hell you want to call it, it's the recording of a financial transaction. There's the recording of a financial transaction. Somebody bought, somebody sold. That's all you need to focus on. Right? I don't know what a bearish candle is. I could care less. All I care about is where the top of it and the bottom of it is. John, you with me? See, the thing is, in trading, you don't have time to sit and analyze what kind of candle it is. Right? All I know is there's a seller at the top and they stop selling at the bottom. Here's a prime example. Okay? Do you see this candle here? Do you see this level? Do you see the space between the level and the candle? Anyone? Do you see the bottom of the candle and the level, and there's a space between them? Okay? Good. Those are buy orders. Those are unfilled buy orders. I think you guys are ready for this. I was kind of trying to hold off on this, but I think you might need to see this. I'm going to drop it in. I worked on it this weekend, and I didn't want to put it out because, quite honestly, I felt last week that nobody was listening to me. So I was like, oh, maybe I'll put it out and I'll charge people for it, because if they have to pay for it, they might listen. It was a rough week for me last week because a lot of the people I was talking to, um, you could tell they weren't listening to me. So I felt like I was wasting a lot of time, right? So I was like, you know what? Maybe if I charge $20 for this video, right? I'll donate the money to like an animal shelter or something, right? But if I charge for it, maybe you guys would actually listen and pay attention, right? So I'm still thinking about it. It's basically the video, and it's a simple video. It's just called No BS Candles, right? It's like no bullshit candle course, right? What do you need to know about candles, right? What do you need to know to make money, right? Take all this stuff and throw it away. That these people are trying to teach you and charge you. They're trying to charge you. You have people out there who are charging, who have written books about volume analysis who have never traded volume. Right? I'm trying to simplify your life, if you wish. Right? Remember Terminator? If you want to live, come with me. There's simple things in candles that will tell you where the order flow is. So this is like one of the most important, that's like the most clear thing. When there's a space between the bottom of the candle and a level, that means that there's bids there. You don't need a DOM to see it. You don't need, anything else. There's buy orders, and the market walks away from the buy orders, and the offer will lift. Now the market's going sideways to see if it can bring in buyers. You know that there's sellers here, so just watch that. Now the problem with all of this, hey Sandy, how you doing? The problem with all of this is that you have to pay attention, right? It kind of helps to make notes too, right? But you gotta pay attention, and you gotta be committed to paying attention. Paying attention is a commitment, and there is a cost, right? There's a cost to paying attention. It doesn't come for free. Your wife's going to get angry at you. Your spouse is going to get angry at you because you're staring at the screen. You're not paying attention to them. That's one of those things, right? You have to sacrifice your time and pay attention if you want to make money. Like if you're doing like trading this week and macrame next week, and you're learning how to make muffins the week after, and the week after you're doing a course in underwater basket weaving, right? Great. I support your decision to explore the world and do those things. But if you want to make money at this, you gotta treat it as a business. You gotta treat it as a business. You can't mess around, man. Otherwise it's devastating. You know, it's devastating. So pay attention and do the simple thing. You know why simplicity is a good idea? Because when systems fail, when things go wrong, right? And you're sitting there trying to remember a three-page action plan, it's not going to work, right? If you have a 2 or 3 page trade plan, you're not going to remember it when you actually get punched in the face. And my friends, you will get punched in the face. So keep your trading simple so you can actually learn how to react. And that's what we teach you. Good trading is teaching yourself how to react, right? How to react when the trade's going in your favor, when it's going against you. You have to know how to react. You have to train yourself. That takes time, right? And I'm telling you, it's not fun. It's frustrating as hell. The first 3 years I was retail trading were horrible. Were just horrible. I couldn't get anything right. I felt like an idiot. Every day I felt like an idiot. I thought I saw something that worked. I thought I figured it out. And then just like 20 minutes later, it wouldn't work. And I started questioning every decision I ever made in my life. Let's see if we've got a reaction at 12 and change as we go up. Right, we're just running out of inventory lower. They're raising price because they saw buyers. Remember I told you, right? I said this is this little sideways action. You go up, you go sideways, it brings in buyers. You go up, you go sideways, give them a little discount, it brings in buyers. Right? Now you guys would you guys call this a bullish candle? Do you know what's happening now? Everyone who's short here and added here, what they're doing is they're going here to cover, and all the supply is underneath them. And the people who own the supply are, oh, here come the idiots to cover. Let's raise price. There you go, Moran. Exactly. Exactly. Right? You know, they shorted under 76.05. They added to it at 8. They added to it at 9. And then, oh, crap. You know, so this price action, even though it was tough to trade, right? If you look at it, see how methodically the bid lifted, came back, discount, lift, discount, lift, discount, lift. Right now they're going to discount it. Let's see where the buying comes in. Does it come in at 10? Does it come in at 9.5? That's what you should be looking for. No, it doesn't. It's not important to know. You just need to know where the buyers are, right? Over time, Italian trader, you'll learn one thing. There's one truth that will never change. The first people to come in and buy when a market drops are short sellers. This is something, if you remember this, it will save you a huge amount of money and frustration. When a market sells off, when you get a move down, the smart money short sellers are the first to come in and cover. Why? Because they have to cover this. All right. And they also have competition. Size and competition. That's what creates support. Yeah, don't worry. Yeah, don't worry about that. All this is just a little sale to bring in buyers. You know that short sellers, the smart money shorts, have you watched my video on how you create a low? Have you seen that video? Watch it again. In fact, not to be rude, but watch it like 10 times. Yeah, but that's just as a teaching tool. You don't need to. But number one, people watch it 10 times and make notes. And I'm not trying to be rude or egotistical. I put a lot of work into that video. It took me years to try and explain to retail traders how this works. So the first people who come in and buy are the smart money shorts. The second people who come in and buy are wholesale longs because they see the bid from the smart money shorts, so they front run them. Then we come in. Now the people who have shorted in those 3 levels will come in and cover, and that's their candle right there. You will see this pattern repeat itself millions of times in every single time frame because that's how the business works. That video took me years to figure out how to explain this to people so they could understand it. And it's simple, right? And this is another thing I caught people not listening last week because last week I was on the phone with someone and we were doing a session and I said, well, you know the sequence of and this person, they hesitated. And when they hesitate, I know they're not listening to me, right? I know they're not listening, right? It's so funny. How many times have I said smart money shorts, wholesale longs, retail, and then the dumb money shorts come in? That's when we yank the offer. When you're making markets, when you're running a deal, as soon as you know that you've got somebody short, and listen to this, as soon as you know that somebody is short, it is your moral obligation to try and bankrupt them because you're using them as leverage to increase the price of your product so you can sell it at a higher price for profit. Repeat that 10 times. Smart money leverages trap shorts to increase the price of their product so they can make higher profits. This is how business works. This is not some secret or method. This is how trading and business work. It has done so for hundreds of years, if not thousands, right? Yeah, you don't have to worry about finding the trap shorts. You know what, Italian trader? If you watch the offer, if you watch the sellers will go, hey, Paisan, they're short under 6 because we don't have to sell it under 6. You know what I mean? Hey, I could see the idiots at 5 3/4. I'm raising price. Boom, you find your trap shorts. The sellers are your friends. They tell you when they're going to raise price and when they're going to lower price. When they raise price, you buy a little bit and you sell with them. You go, hey, can I sell a few with you? Right? When they're putting it on sale, hey, can I sell a few with you short? Right? So you see them selling at 12, 10, 11. You short 11 and 10. You go put some bids at 8. You cover, you make a couple of points. Right? Don't worry about that. Just don't take half of your question and throw it in the garbage. Sorry. The first people to buy are smart money shorts. It doesn't matter if it's a trend or a big sale or who the hell cares. They're always first to the bid. Okay? Don't worry about trend, this, that. They're always number one, right? You're making pizza. You need flour. You need water, right? To build support, you need smart money shorts. They're always there. If you have to see, the problem is, and Badir, I hope you're close with your software. We're looking for 7606 and a half as we're correcting inventory. Finally, we get some correction, right? Yeah, now you get it. Don't ever forget that. It's how markets are made. It's how markets are made. Badir is building a software that puts you in the control seat of having to act as a market maker, as a wholesaler. The problem retail traders have, and this is true, they cannot visualize what's going on in the business. They cannot visualize what's going on with this chart because they've never sat in a brokerage firm and handled an order. You're trading 1 to 3 contracts. You need to know what the people who are trading 5,000 contracts are doing, but all you need to know is that now they're putting it on sale. You don't need bookmap or bookworm or all that crap. That's all garbage. All you need to know is when they start putting it on sale, right? You see the offer moving lower, the top of the candle, top of the candle, top of the candle. So you don't care, Rejohn, if it's a wick or a twick. All you see is the sellers are moving their price down. You short, you put your stop here, you short here, you put your stop here, and then you put some buy orders here. So when the market hits that, you cover, thank you, goodbye. Simple, right? Now, you traditionally want to start doing a look above and fail, but eventually in markets that are slow like this, if you watch and pay attention, go and rewind the chart, you'll see that the short was there. As soon as they lowered price here, and they kept lowering price, So this is where you want to take your short and you put your stop here because that's where your sellers were before, right? So if you short this area, right, you put your stop here because if you lose these sellers will tell you, hey, buddy, we're raising price, cover your short. Wouldn't it be nice if somebody would tap you on the shoulder and go, hey, knucklehead, we're going to raise price, go cover? That would be a good software, right? Well, guess what? The candles are telling you, but you're not paying attention because nobody told you what to look for. They're telling you about wicks and bearish candles and, you know, raccoon candles and squirrel candles and all this nonsense. All you have to know is that they're moving price down because the top of the candles are where the sellers initiate. How do I know where the sellers initiate? Because I've sold more stock in one day than any of you guys have traded in your entire lifetimes combined. Okay? I'm like McDonald's, man. Billions and billions of shares sold, right? I have sold stock for every criminal, despot, sophisticated finance people, everything. Billions of shares. Sometimes I do like a couple 100 million shares in a day, right? And we just sell. We're liquidating. So when we're liquidating, the candles get lower. Does that make sense? Can you guys visualize people lining up to sell and pushing each other out of the way? Remember you see those videos on the floor, all those guys are pushing against each other and yelling and screaming? That's what's going on. They are creating the top of the candle. Do you guys understand what I'm saying now? So Dave's selling at 5, I push him out of the way and I go 490, right? A mother truck goes 475. George pushes us all out of the way and goes 450. That's what causes the top of the candles to go lower and lower. That's what you guys call trend down. Trend down means sellers are putting the thing on sale. They're trying to get rid of their product before somebody else takes their customer. It's simple. Now pay attention and go make some money. Okay? That's all you got to do. That's a good liquidation, right? They put it on sale. Where'd they put it on sale? Right back to where they bought it. The blue area is the cost basis. That's how much they paid for their crap. They got to sell it above 6 for, you know, a good hour. Now they have to put it on sale and see if we can bring in some customers. That's it. That's all there is to it. They have taken this business and bastardized retail trading to the point where people are so confused they can't find their butt with both hands when it's just a simple market. You know, it's just a simple market. So if you're still short, go bid 7604, oh, 3.5, right? 3.5, 4. You'll find some bids here. Most probably they'll front run VWAP again, which is at 7601 half, right? If the selling gets really, if we really have to put it on sale, right, and we totally correct inventory, we'll take out this 7601 because there's a fairly large stop there, right? There's hours of people who are using that as a stop, so they'll come piling out, right? Don't try and buy the dip until it's shown you support, okay? What does that mean? It means do the look below and fail, right? So if it comes here, you're looking for a look below and fail. Why? Because VWAP is there and they're going to front run VWAP as a bid. Got it? Do you understand what I'm trying to say? So what you want to do is you want to wait till it goes under 7603 and pops back up. See here, this is where I'd always buy it. I'd go in and I'd start buying the 4 halves, 4 quarters. and I try and front run that level. Now, sometimes it'll work, but a lot of times they'll sell into it, right? See how they're selling into it? You know there's going to be a seller at 5.25. Now they're selling 4.75. So if I'm long at 4.25 and I'm bid at 4 on 1, the only thing that's saving me are these little buyers here. So if I lose that bid, it's going to come down to 3. Now watch and see that seller, see if they push price down, right? Sometimes you can get lucky and buy this, right? But you know that there's a seller there, and if the seller moves lower and lower and lower, my goose might be cooked and it might do a look below and fail. That's why I like to kind of wait, because I'm a person who doesn't get lucky in trading, unfortunately. You know, like some people, they go, "Oh, I started trading and made 50 grand in 3 days. It was so easy." You know, and then they lose it all. But I've never been that. Like my first trade was a loser, my third trade was a loser, right? It never comes easy for me. So that's why it took me so long to figure out that you wait, and it makes sense. The reason why it makes sense is you wait for the sell orders to be taken in. Smart money shorts, wholesale longs, right? So you're waiting for that sequence for that. That right now is not happening. So if I'm long at 4.25, now I'm starting to regret my life decisions, right? See, that's why I always take it early and get stopped out. Then the trade works. Sound familiar? There's why, right? There's why. See, look. Now that bid might be there, it might not. I'm gambling on the fact that that bid's there. But if I wait for a look below and fail, then I know the bid is fair. Because the sellers told me they're raising price. Right now, the sellers haven't told me anything definite. So do you guys get what I'm trying to say? That's why I like to look below and fail, because then I know that the sell orders are complete. Which is another thing that retail traders, this unfinished business thing, take that and throw it away. Whoever came up with this unfinished business, incomplete auction bullshit, throw that away. When the orders are done, they're done. If you have 1,000,000 shares for sale and you sell 1,000,000 shares, that order is complete. The business is finished. People don't realize that. So don't ever fall for that unfinished business thing. Unfinished business is when the orders are complete and the client has their fill. Okay. So here I'm long 2 at 4.13. I've got a sell order at 5.75, right? And I should actually sell one at 5.25 and see if they take it, because I know there's a seller at 5.25. They took me at 5.25. Now let's see if we can get the 5.75 product sold. Boom. Oh, it printed but no fill. So I'm offered at 5.75. I'm not getting a fill. I'll move it down to 5.5, and of course it moves against me. And now I'm out at 5.5, right? So there you go. Right? I jumped the gun and it worked out because exactly what I showed you guys the last time. Bids, right? So this candle, when it came down and went to the bottom of that candle, that tested my faith in the trade. But then as soon as I saw it pop back up, and then the next candle, the low is higher, right? That means the bids are moving up and they're following the sellers. That is a fail to look below. It's a little bit trickier. It's nice that it was nice and slow so you guys could see it in slow motion. Now, for those of you who weren't paying attention, please go back and watch the video and rewind it and watch it. And you guys know who you are, okay? Thanks, everyone. We'll see you at 9. Have a great morning. Stay out of trouble there, okay? If you want to learn how to trade, people who are watching on YouTube, thank you for joining us. If you want to learn how to trade with some common sense and actually make money, check us out at tradingsyndicate.org. We will teach you how to make a living without any BS and no double talk, okay? Thank you so much. Appreciate you guys. See you in a few hours. Bye for now.